The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from Tiger Financial News Network. Welcome to the June 9th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a marvelous weekend, fantastic weekend. I am certainly grateful for your presence here today. Now, our first course of action this morning is to make sure that we know our daily outcomes. And for me, my outcome during the next 2 hours is to teach you how to master the tools for trading. And that includes the tools of the mind, because when you and I, when we can master the tools of our mind, we begin to think like a strategist. So this morning, you'll hear me use terms like A to B equals CD, terms like swing points, Gartley and butterfly patterns, various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I each day and each time frame that we trade, whatever chart it is that we're looking at. Now, each of these patterns and signals on a standalone basis are what I call tactical tools. And knowing how to use these tactical tools is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, well, it's to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it is not an option in our playbook. Now, let's not conclude that failure and losing money are the same things, because they're not. You know, it's just as simple as spoilage. It's just spoilage. We got spoilage in the refrigerators that we throw away on garbage day, or eventually. And we have spoilage in the markets when we trade. And as long as you use a bracketed order, as long as you use stops, that means you have an exit strategy that covers both sides of the trade, then losing money is nothing more than spoilage resulting from a failed trade pattern. And that, folks, is a part of any strategy. It's what I call system expectancy. It's our ultimate performance tool. So today and every day, let's do what we can to think like a strategist, because strategists, they slay the tactician all day long. So let's go look at one of our tools to help us think like a strategist, a tool I call, whatever you have, you must use it or you will lose it. You know, the good news is that our natural state, the natural state of our body, is that of health, of strength and flexibility. But if we spend most of our time inactive, we tend to get weak and stiff, which in turn will impact our mind, which will create, laziness, maybe even depression out there. And then our natural state of health, well, it can be lost. That's why we've got to use it or lose it. Same thing happens with time. 24 hours a day are available to each and every one of us. That's why we have to use it or lose it. Everyone has talents. What are yours? Are you an artist? Are you a giver? What is it that's your special talent? You've got one. You know that you do. You've got many of them. You've got to use them, or you will lose it, folks. And if you lose it, that would be a travesty. You know, in 1953, Harlan Sanders was an out-of-work 66-year-old gentleman. Harlan, his talent was his method for frying chicken. So loading up his car with a 50-pound bag of his special seasoning, a pressure cooker, that's how he hit the road. And he visited restaurants one at a time with one mission. Let me cook chicken for you and your staff. If you like the way it tastes, I'll sell you my seasonings, I'll teach you how to cook the chicken, and you pay me a 4-cent royalty on each chicken you sell. Colonel Sanders, folks, he used his special talent and that was at the young, ripe age of 66. I say use it, or you will lose it. It is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here. Not that they haven't been kicked off right now. We've got Dow futures off about 16 points. They're trading out at 16,915. S&P futures, they're off about 3, trade at 1946. 50. NASDAQ futures down 3 points as well. Trade at 37.94.75. Russell 2000 off a bit. King dollar on the move this morning, up about 15 cents. 148 ticks. Trade out at $80.57 out there. Goldilocks up a buck right now. She's trading out at 12.53. Silver up 8 pennies. Trade at 19.08. Light sweet crude on the move this morning, up 0.8%, up 84 cents. Trade out at 103.50. Our call-in number, 877-927-6648. Absolutely happy to take your call, field your question, assist you, do whatever it is that I can. If we take a quick peek around the globe right now, kind of a flattish type market over in Europe this morning. The DAX is up 2 points. I'd call that flat. FTSE is up 12. It's traded at 68.70 over in Asia last night. Green arrows across the board. The Shanghai up 58 cents, though. That's no big deal out there, so we'll call that flat for sure. Hang Seng, a little different story, up 0.7%, up 166 points. It closed at 23,117, and the Nikkei was up 47 points. It closed at 15,124. So, Where do we begin our day? Let's begin with the S&P 500. Let's go take a look at the daily chart here for the S&P 500. If you're watching us on TigerTV, thanks so much for doing that. If you're listening on your radio, your mobile device at TFNN.mobi, we appreciate that very much. Remember, you can catch the archive of this show at TFNN.com on Channel 9. Of course, you can get it at the iTunes Store. So many different ways to be able to grab the show. I'll tell you what it is that we're looking at here. Now, there's a couple of A to B equals CD patterns that we can draw inside of the ES Mini. Let's draw the larger one first. The large one, we're going to pick a swing point. Now, a swing point, for those of you that are new to the technical analysis or taking a look at a chart, and, geez, it almost seems like it was just yesterday when I was certainly in that boat here. A swing point, or the swing points that we look at, certainly for drawing A to B equals C, they're anchor points, if you will. And those anchor points, we're looking for significant changes in trend. Much like some of you who are driving to work, you're looking for a change in trend in the traffic that you might be in. And many times, those changes in trend take place at around the same curve. Well, in this case here, for the S&P futures, our A point on the larger A to B equals CD, that's going to be the swing point low of February 3rd. Market had been moving down into that low, nice wide-ranging bar there that happens to make the lowest point in around that intersection where there was a change. It's either, well, let's see, that point happens to be 17.25 and a quarter. I take that back. The actual low here, if we're going to get technically accurate, we might as well. That's the February 5th level, and that's out at a price point of 17.25 even, Steven. That's going to be our A point. That's going to be the low. Our B point out here, in this case here, some people might choose this one right here of March 7th. And if we chose that, then you would have to use a swing point right down here, of the March 17th. And as that A to B equals CD could have been forming, that would have been the right thing to choose. But you see, we made a lower low out here for a C point. That was back on April 14th. Now we got to come to really the highest high since that A point was designed, since that was developed. That happens to be right out here on April 4th. April 4th becomes the B point. The C point, that happens to be low on April the 14th. 1-to-1, A to B equals CD, regardless of volume. It's a lightning bolt pattern, and, even if it gets up above the B point with volume, which in this case, let's see here, the B point had volume of about 1.2 million shares. When price really got over that level, it was on this trading session back here on May 23rd, about 1 million shares, 761,000 contracts, I should say. That was back on May 27th. So the A to B equals CD. It's up above the B point on lighter volume. Nonetheless, the 1-to-1 has a price target of 19.70.75. Now, what could get in the way out here is this market is extremely overbought. We're using a daily chart as we take a look at a daily chart. If I go ahead and I pull the very bottom indicator that you're looking at, by the way, this is the e-signal charting package, e-signal software out here. If we take a look at the bottom out here, you're going to see that's a relative strength indicator. That's a momentum move. You can use a stochastic as well. RSI and stochastic, they track 80%. The correlation is about 80 to 85% if you go back over a huge history of time out there. That's why I say become a master of one as opposed to both. Become a master of one and then add some other technical indicator that might assist you with your trading out here. If you take a look at that relative strength indicator right now, it's priced out at 72.96. It's in the extreme overbought condition. Last time that the relative strength indicator was up here was back around in this level, I should say, back above the 70 line out there. That's right around the trading session of September in 2013. Well, we can see at price out here went ahead and let a little doji candle that formed on September 19th. The leaves fell off the tree on September 20th, and there was a bit of a retracement out here. Well, we don't really have that type of candle formation, at least not as of yet, as we speak out here. So price here on the daily chart, the ES Mini says it wants to get up to about the 1970-75 level. That is the larger A to B equals CD out there. If we go ahead and take a look at a smaller one, let me just go ahead and delete this one off the screen out here. Let's take a look at the smaller one. Let's actually start from the trading session of April the 14th. So the low there is going to be our A point. The B point is going to be that little, looks like the doji candle that took place here on May 13th. Makes a 2-day retracement into a low on May 15th. The market takes off. You can see right now that on the smaller one, which, by the way, if you take a look at the B point, the May 13th level, that volume out there was 1.1 million shares. When price got above that area, it was on this trading session here, May 27th, only 760, I keep saying shares, 761,000 contracts. Forgive me for doing that. Too much multitasking going on. Nonetheless, the A to B equals CD out here, the 1-to-1 is at 1947.75. And, of course, right now, the ES Mini is trading out at 1946.25. So it hit that level. It's completed the 1-to-1 A to B equals CD. That does not mean that it doesn't want to go up, maybe even expand to the 1-to-1.272 level. We use Fibonacci numbers around here, at least I use Fibonacci numbers around here to take a look at price momentum and movement. The A to B equals CD pattern, very key pattern, gives you a ton of information out here. It's 1-to-1.272, takes you up to 1972. So you can see we've got kind of some synergy here. We've got a couple of patterns that are taking us into that 1971-ish type level out there. What could get in the way of a move out there? Well, it would be sellers. That's the first thing that could get in the way. But if we take a look at what could get in the way here right now on my chart here, this happens to be the Instant software that I also use. I use 3 different charting tools to help me gauge what's going on inside the market. If we take a look at the euro, Japanese yen, here's the 120-minute chart. We can see that the euro, Japanese yen has been pulling back, so our futures have been pulling back as well out there. No big deal. As they've been pulling back, if we take a look at levels where they pulled back, and you can see right here in this area, there was a little shooting star. That is the opposite of one of my favorite candles and yours. That's the hammer candle. Shooting star takes place at the highs out there. On the trading session at 1 o'clock in the morning, it's a 120-minute chart, and that was on, what was that date? That was on June the 4th out there, a little shooting star. That area is acted as resistance. Now we saw a little bit of a close above it. This took place here at about 7 o'clock last evening, 7 o'clock, but it quickly gave that back up in price. So really, that is your resistance area. Right now, you've got price just testing its most recent swing point. That happened at 9 o'clock in the morning. That was on June 6th out there. If it breaks that area, if we just take a look at natural retracements, prices in the 120-minute chart, neither overbought nor oversold just yet. I would have to say 138.96, maybe even a test of that swing point low, 9 o'clock in the morning on June 5th. Out about the 138.72-ish, 66-ish range. That could get in the way of a little bit of a rally out here, a little bit of a pullback. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. It is a marvelous Monday, and let's go to one of our magnificent Tiger traders, John in Philly. John, thanks for calling. Thanks for holding. How you doing this morning? How was your weekend?
Good morning, Steve. My weekend was just terrific. The summer weather's blossomed. Took advantage of it. How about yourself?
Yes, it was nice. It's a little bit warm and sticky. Summer certainly has set in. You know, June, July, August in Florida. That's why I like wearing T-shirts and a pair of shorts all the time. That's my dress attire.
Well, there you go. Well, we invite you up here in the north to migrate to the north for the summer time frame. It's terrific up this way.
Yes, it is. Yes, it is. You wanted to take a look at gold, right?
Yes, sir. I did want to get your thoughts and perhaps have an exchange on the gold. First, I wanted to just thank you. Back on May 21st, that was a Wednesday. Mm-hmm. You helped me when I called in with a question on the NDX NASDAQ 100 stock market. It was 36.25 at the time. I was trying to assess how bullish or not it was at the time and asked you about four names: Gilead, Apple, Google, and Amazon. And right. I will tell you the feedback you gave me that day was very instrumental in my being able to make a decision to get long and take advantage of this rally as occurred since.
That's great.
Share with you here, we're $37.95 on those NQ futures. And for me, I don't see any sign of a top at this moment in time. But so thanks for May 21st. I appreciate that.
Man, my pleasure. My pleasure as always. All right, so let's find the next trade out here. You're clearly looking at gold. So how can I assist you there? What are you looking at?
What do you see is my question. Do you see anything definitive from your work? Limited downside, limited upside? I'd appreciate your view, please.
Well, the one thing that I have on our screen right now is the weekly chart in gold, and I've mentioned this. I don't know that I don't recall if I've shown this chart here on the air live. I include it in the newsletter periodically, and gold has about a 13.5 month trading cycle, where it identifies typically swing point highs or lows. I don't know, it just depends on the way that the market is moving. And I feel pretty comfortable with the 13.5 month cycle, John, because I can go all the way back into the time frame here. I mean, I've only taken it back to May of 2008. But I figure between May of 2008, we're in June of 2014. That's pretty good, look, you'd like to have more data points, and you can go back further. But if you put it on, and you can watch us on Tiger TV, folks, if you're watching these little humps towards the center, three-quarter area of my screen, and that's why I say it's about 13 and a half months, and what that first means, John, is that cycle says the middle of July. But I also recognize that this doesn't, when you're taking a look at a 13 and a half month, it doesn't. We're starting to get into that time frame. So in my mind, when I take a look at the cycles that go on in gold, the question is, does it take place with regard to forming a low? Because we've had gold moving down. So at this stage here, it suggests to me that what we're looking at is more likely a low that's being formed in gold. Now, is it the week here of I don't know what the weekend here is, June 15th or what have you. Well, is that the week, or is it the weekend of July 11th out there? But it works really, really well. If you take a look at the last two cycles, June of 2013, January of 2014, it's worked really well at identifying lows out there. So from a perspective of taking a look at a 13.5-week cycle that works really well, we're in the window. And I just don't know whether it's today, tomorrow, it's sometime within the next 4 weeks. We are inside a window from a long-term standpoint. So that's the first thing that I would look at out there. And that's if you are a cycle-type trader, I would encourage you to take a look at that 13.5-month cycle that's out there. If we take a look at just from a shorter-term time frame than that weekly chart, what I would do is I'd take a look at a daily chart. And if I come over and I take a look at the market profiles inside the TAS system out here, it says if you were going to go ahead and try to take a trade now, 1245.70 ought to be support. That's its unfair low out there. That's sort of long-winded on the 13.5 month. You want to hang on through this break here? We'll get the market open. Okay. We're going to get the market open out here. Then we'll go back to John. We'll continue taking a look at Goldilocks. We'll get his perspective as well as far as what he's taking a look at. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. Although no one's out the door, you've got the Dow's up 5, S&P is up 80 cents, Composite up $3, Russell 2000 up 2. Apple now trading at the stock adjusted price of $92 a share. Lead the charge the upside. You've got several buyouts or activist-oriented stocks. Hittite Microwave up $17, 28%. Idenix Pharmaceuticals being bought out today. That's up a nice 230%. Hope somebody out there had some of those shares. IDIX. Family Dollar Store up $8. Dollar General up. Hillshire Brand up a couple of bucks. The downside, Wynn Resorts. That's off $7. Green Mountain Coffee Roasters off $3. Converse down $2.73. New Star off $2.50. Las Vegas hands down a couple of bucks. Before we went to break, we were talking with our man John from Philly. We were taking a look at gold. The first chart that we really looked at was a 13.5-month cycle chart. Now, John, were you familiar with that cycle chart? Does that weekly chart that we were looking at, does that assist in any way with anything that you're looking at?
Steve, I do appreciate that. I know you're a diligent worker at identifying static cycles. I was not aware of that one, so I appreciate you sharing.
No problem. My pleasure.
Yeah.
Now the daily. The daily chart, I know one of the other tools that we like to pay attention to help us identify, where there's area of resistance and levels of support or what have you. And I've mentioned on the show last week, there's a candle pattern that occurred between June 2nd, sessions June 2nd, June 3rd, June 4th, and June 5th out there. And it's a pattern, I like to call it my U of M pattern. In bullish terms, it's referred to as a three-river morning star pattern out there. Helps to identify significant areas of support. Most charting systems will not pick it up because they're only looking for three candle formations. It's the same type of candle formation on top of other patterns that were completed back in March of 2009 and in several other significant lows that were formed off of the bottom out there. And that pattern was actually formed and completed, the little bullish engulfing candle as well, on June 5th. So those patterns on a daily basis with a unfair low or support level of 1245.70 says there would be pretty good support if you were trying to take a long trade. And the key here, I think, would be on the daily chart because that's what we're looking at. And I got a little bit of a delay here in order for me to stitch together all of the monthly contracts in order to truly put together the proper market profile and identify those areas of resistance and support. I've got to create a new symbol. So it's not really a symbol. It's out there, and that's why I've got a little bit of delayed data. But it closed today above 1256.60 on a daily chart for gold would say being long for a trade would make sense. Does that help?
Yeah, I do appreciate that. Steve, that dovetails with some things that I'm seeing. What I will tell you here, a couple of things. One, there is no proof whatsoever at this moment in time that we have a bottom or that an uptrend is in progress.
Right.
That being said, I can tell you this. We rally over 1269, 1270. That is a signal to me that an uptrend is in progress. That'd be number one. And then more importantly, I see in here the risk reward as being terrific for buying gold. I will mention from the March 31st low, that was coming off the top, came down to 1280, 1275-ish. From March 31st into May 23rd. So March 31st to May 23rd, almost 2 months.
Right.
Gold was comatose, in effect. It was. Virtually nowhere.
Yeah.
With very little volatility intra-week.
Yes.
Once as we came into mid-May, I will tell you, as that pattern emerged, it became quite clear to me the risk was for another sell-off in gold. We got that.
Yes.
And then starting Friday, May 30th, Monday, June 2nd, Tuesday, June 3rd, and then Thursday, June 2nd, 3rd, and then June 5th.
Okay.
Those 4 days, gold got down to 1242, 1241, 1240. 4 separate times, rejected that level, bounced up. That is telling me the odds are reasonably good that a bottom is formed. And what I can say unequivocally, not knowing what the future will bring, is that I want to be long here with stops just under that 1240 as a trader, and then just see what happens.
Yeah, no, I agree with your analysis absolutely, and and there's candle formations, there's market profiles that suggest a trade. And clearly, if it breaks through those lows, then what's likely to happen is we're likely to see a completion of at least the 1-to-1 A to B equals CD to the downside, which that's a confirming pattern that we have. So my hesitation is that, at least from the longer-term perspective, and knowing about the 13.5-month cycle, is that we do have a confirmed A to B equals CD to the downside when price broke through the low of April 1st out there. We haven't exactly seen a lot of conviction follow through since then, and that price level of 1-to-1 would get you down to the 1216 area. And that's one level. I would say also on what I like to use from a intraday-ish type time frame to take a look at how things are moving. I'd like to take a look at the 120-minute charts out here. And inside gold, and what I've got up on my screen here now is one of the Rhodes momentum indicator strategies here. Is as gold was making its lows. Let me get my crosshair cursor out here. So it's making its lows back in the time frame of May 30th through June when it just really moved sideways. We had one of my favorite patterns, which is when prices move lower, when prices are moving lower, and it's doing it on less weakness, less relative. It's called the relative strength indicator, but as things are moving lower, it's done with less weakness out here. And then you had that nice big session that took place at about 10 o'clock in the morning on June 5th out there. But unfortunately, what gold also did up at the high out here recently is it made one of these price relative strength divergent patterns, and it did that at 10 o'clock in the morning on what looks like June 5th out here. I don't have one of my tools. Let me see here if this will tell me. Darn. Give me one more second out here. I think I can grab the date here. June 6th. So 10 o'clock in the morning, June 6th. So you'd like to see price get above that area. So, I like how the bottom was formed. I don't necessarily like how that top was formed with less conviction. And it was such a narrow bounce. You typically don't see those taking place so early on in a move at the high. So it's just something to be aware of. There were a couple of prices that you had thrown out there as your signals with price to get above. I would throw out another, I think it was like 1269 or so in that area, John. I would throw out one.
Yes, that is correct, Steve.
Yeah, so I throw out one other area to be paying attention to. This is another version of the Rhodes momentum indicator charts. The top portion being the weekly, the bottom portion being the daily. Obviously, with gold at some point in time finding the bottom, whether this is it or not, I don't know. But if it is, it's going to take a little while for the weekly to turn bullish out here. I would say that 50-day exponential moving average has acted as pretty decent resistance. If we go back and we take a look at price, really hasn't been above it since May 7th. It got above it for one day, one trading session. That was back on May 14th out there. So I'd also throw out there getting above 1269 in your work would be bullish. I'd have to also say certainly like to see it get above right now 1283. Now, the 50-day exponential moving average, that's going to change over the course of the next couple of days. But I would use that because that's the black line, folks, going across my screen on the bottom here. And that's what I would also use as as another indicator. So I agree with you. The risk is good here because of the support levels that we're taking a look at. And if it doesn't work, then you just keep probing and wait for the next type of bottom to form out there. So those are all of my thoughts in taking a look at a number of different charting tools that are out there. Can I ask the 1269? Why are you using the 1269 as a level? Is that a moving average or something that that you're looking for to get above?
Steve, that comes from a blend of 3 proprietary studies I employ, giving me a nest right at that level.
Okay.
That's all I can tell you at this moment in time.
Yeah, that's okay. Okay, good. Well, you got the numbers. That's great. You've got them. I will tell you in the market profile, again, on the daily basis, getting above that price level of 1256.60 and closing above that today, that would be bullish on that standpoint. So your 1269 would not be far off.
Steve, thanks so much for the input. I really appreciate it.
Hey, my pleasure. Thanks for sharing. Thanks for calling, and have a great week, John.
Very good.
That was John in Philly. That was our in-depth analysis of Goldilocks. Let's go check out and see a couple of things here in the markets. Let's go see what's moving out here this morning. Let's take a look at, I got an email early this morning. I believe it was Carl Icahn, right? He's taking a stake in Family Dollar Store. I think that was announced out there. And there were some questions. Was there anything in a charting package that I have or any tools, even if we go back and take a look at it now, is there anything that would have been able to give us an indication that somebody might have been accumulating an interest inside of Family Dollar Store? So let's do this. Let's do a couple of things out. Let's take a look at our different tools. So let's take a look at a number of different tools, just like we did with gold. So in the case of, I think, it was Family Dollar, or was it Dollar General? I think it's Family Dollar that Icahn took an interest in. So if we take a look at Family Dollar Store out here, one thing that we'll take a look at, I was talking with John about one of my favorite patterns, which is called price relative strength divergent pattern out here. If we take a look at a low that was formed inside Family Dollar Store, this is back on the trading session of March 27th. If you take a look at that candle session, the relative strength indicator at that stage was down at 23.20. Now remember, any market that gets below 30 starts to become oversold. And in an oversold condition, that doesn't mean it has to pop and move higher. It just means that condition needs to work its way off, oftentimes by either moving sideways. How it works that condition off is very helpful in trying to identify what goes on inside a pattern. Well, what's interesting is this stock really didn't do much. It just moved sideways, much like many of us do on Thanksgiving after we've eaten a meal. We kind of move sideways to the sofa and we watch one of our favorite movies, whatever that might be out there, and then we have some more pie or something along those lines, and then we really move sideways. But nonetheless, I digress here. What Family Dollar did was on the trading session of April the 11th, it made a lower low. And that low, it got down to a price point of $55.69. So it made that low out there. And it did it with what? It did it with, again, less relative weakness. That's the little red line on the screen out here on my e-signal chart. Now, I've got a tool similar. It doesn't follow the exact instructions of the way that I trade this pattern out here. So a number of these red lines that you see out here are not the way that Stevie's son would teach you how to trade that pattern. I've got an automated tool that I have created. I've written the software for, and that is inside the Ninja Trader platform out there. And maybe during the break I'll go ahead and pull that up. But what I can show you by taking a look, so it makes a lower low. And does it on less relative weakness. Now, that's an indication of, doesn't tell you whether somebody's accumulated. That's just telling you that, hey, you know what? The price move to the downside out here is not necessarily real. Now, just by moving lower, just by doing on less relative strength, isn't a time where you come in and you would take a position. You want some kind of confirmation that if somebody's accumulating it or somebody is buying and trying to support it, that they're saying BS. They're saying before Steve out here. And what they're doing is that signal actually came on this trading session here for April 14th. Now, it's not because it was a green candle out there. It's because the candle that was formed is referred to as a bull separating line. And a bull separating line, other than a gap up, a bull separating line, and a gap up qualifies as in many cases, a bull separating line too. It's just a much larger one. In this case, that's not what we had here, because in essence, it was a gap, right? If you take a look at the prior session where price closed on April the 11th, the close of that session was at 56.10. And the open of the very next session, the opening day, 56.59. You see how it closed here right above or right at the open? The open on April 11th, by the way, was 56.54. The open on the very next session, 56.59. See, that's what kind of like a little bit of a gap out there, and it's called a bull separating line. And that is as strong of a candle formation as you can get from a reversal. Now, most people looking at that, they would not have known that. They would have thought, no big deal there. That was a significant move inside Family Dollar. FDO is the ticker symbol out here. Got a little bit of a bullish engulfing bull sash candle. It just kind of moved sideways out there. April 22nd, you got a nice little confirmation out here. Looks like a little hammer candle that formed down here at the lows again as this accumulation. So here is likely, and I don't know if this is where it did occur or not, but here is where there was certainly some accumulation going on. Take a look at the volume down at the bottom, all on light volume. An accumulation happening on light volume. So there were some signals out here that Carl and others perhaps maybe were accumulating stock. And now today, it's off to the races as we speak. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 19 points right now. S&P is up 2. The NASDAQ Composite's up 5. The NDX 100 off a couple of bucks here. Don't know if that is more a result of Apple's reverse split that went on. The Russell 2000 is up 5 points. So you got the Russell 2000 leading the charge again here, third day in a row. New York Stock Exchange is up about 12 points right now. Leading the charge, the upside here, you've got Hittite Micro, what is this? Hittite Micro something or other, microwave, I think it is. They're up a nice 28% out here. It's trading at 77.76. Idenix Pharmaceuticals up $16. That's up 231%. That's on a buyout. Intercept Pharmaceuticals joining in on the fun of 5% here this morning. It's up $13 and change. Family Dollar Stores, we covered that in great detail just during the last break. That's up $9.60, 16% to the upside out here. Dollar General, Doug, moving along there. I think Buffett's in on one of those. Probably the Dollar General side, up about 11% here, up $6. Pharmacyclics up $5. Google's up. Analog Devices, ADI, up $6.23. Let's go take a look at Analog Devices out here, and let's look at the daily chart, see what kind of pattern we've got. It's taking out a swing point here this morning and doing it with volume. Thus far this morning, it's traded 1.7 million shares, and it's up above all of the most recent swing points. Looks like the swing point is April the 3rd. That's got volume of 1.6 million shares, so it's going to take that swing point. It's taking it out with volume here. A nice wide-ranging bar. Let's go take a look at the A to B equals CD to the upside inside this equity. Now, the A point, and again, the ticker symbol that we're looking at is ADI, Advanced Analog Devices out here. The A point that I would be using for this is I'd come back all the way to the February 3rd level. That's where the A point is. That's the low down there. Your B point, I don't know if I've got the exact. It looks like it's somewhere maybe like right around April 4th. I don't want to spend too much time. I'll use the April 3rd high at 54.40. It's going to be somewhere in that vicinity. And the C point is a retracement back in the April 28th low out here. Seems to be that this is following the market only right now this morning, truly breaking out above a B point of an A to B equals CD, the upside. The price projection on that, the 1-to-1, takes it up to a price of 57.33. You're at 55.90 right now. I would say if volume can keep up at this pace here, if it gets to the 57.33 area and continues to do it with volume, more likely you're looking at a move into the 59 area. Now, that's the daily chart, so we've got 57, 59. Let's take a look at a weekly chart out here, see if it's up above its market profile here this morning. I assume that it would, so support on this ought to be about the open this morning, 54.40, and as long as this equity can stay above that, that would be nice and bullish out there. That is ADI, Analog Devices out there. If we take a look at, let me come back here, see what else we've got that's moving worth. Let's take a look at Gilead Sciences. G in the Den had mentioned Gilead this morning, using that as one of the barometers for taking along inside of the NDX 100. So let's go take a look at it and see what it's doing. It's pulling back a bit this morning, trading out at 78.95. Its level of support ought to be 77.46. Again, it's a weekly chart that we're looking at, so longer term, 77.46 out there. That's its unfair high. That should be a level of support. Let's switch over, take a look at the daily chart, see what it's done here on a daily basis here thus far, see if it's below resistance, and it is on its daily chart. So the daily chart here is actually, if you were using the market profile, it's actually into kind of a sell mode out there. I wouldn't do that knowing that support on the weekly is not that much further below. Boy, time flies. It is a magnificent Monday, marvelous Monday as always. Thanks so much for joining me here. If you're off to start your day, have a fantastic day, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.